Good evening. Welcome to the live Facebook. This is Martin Wong here, and for this Wednesday, we'll be talking about how to prepare you all, especially our SmartRobie users as well as our member VSA 360, and those of you who are listening for the first time, preparing for the stock market is dropping. Alright, now what? So we're going to be talking about a couple of strategies that you can use. I know some of you may say, hey Martin, isn't it a bit over prepared? As you can see, the market is still holding on very well. But I always want to prepare everybody. I think that is always been the best I think the best gift that anyone can do, especially if you do have a substantial level of investment in your portfolio. Let me just turn on the lights here, right? And then that would do. At least you can sort of pre-prepared going forward what are the kind of strategies that you want to do. So let's push on. And also, as usual, I will also update the Bursa KLCI, the US market, going forward from here. All right, now, and again, of course, as our usual, if you have any stocks that you want me to look into it, feel free to pencil it into the comment. You know, usually our members are a bit shy, and audience of the public are also shy in here. And of course, our company Trade VSA, we've been awarded the MD status as well as the first digital investment advisor license holder by the Securities Commission of Malaysia. So tonight, without further ado, we also been really focusing on using the algorithm trading, which many of you have known, the Pentagon guided algo, pretty much dwell into the methodology of volume spread analysis, tracking smart money in here, and we were one of the finalists as an investment tech of the year for Asia 2025, which is a considered achievement in here. And of course, also our winner here, who used the same technology, the same algo that many of you are using, doing and finding a good shares from a 19.5% profit from Netgate, traded with RHB Investment Bank in here. Of course, year of snake. Everybody want to forget about this. All right, last year of dragon was a much better year for Bursa KLCI, but this year the FBM is still pretty much in the red. I think -4% in here. I think no doubt about it. Many of you are already complaining, really our Bursa Malaysia market hasn't been moving up. Where should we? So this is also part of the so-called preparation at night. I want to prep you guys out. If the stock market is falling, what can you do about it, right? So let's look at the Bursa market this evening, okay? So we're going to go to the exchange here, just make it a bit smaller, right? Maybe I'll just go to the FKLI, which is much better here, all right? So this is the trading view that we have, and of course we have also our Pentagon guider algo inserted into this, as you can see. So we're just waiting for the market refresh. So as much as you can see, the KLCI year to date is about -3.8%. Did hit the top. As I said before, it's been sort of a range bound kind of thing in here. Finally staying above the 200-day moving average. That's the only positive going forward. And I've said before to our members on Monday, the KLCI will probably end around this level too, just below the 1600 level in here going forward. It may retest back 1600 and then come back down, pretty much finish where we are this year. So don't expect too much. If we do go to the positive, that will be a positive closing to it, but other than that, sorry ladies and gentlemen, this is where it's likely to be. We will end with the closing and the negative territory in here. It would be nice if we close it a positive in here. Alright, so next one is Wix, which we always talk about, but before we go on to Wix, let's talk about the Nasdaq, which is doing very well. Nasdaq, I think many of you are really talking about, hey, maybe this market is about to fall. But if you look from here, this is what we call a double top waiting to break out. You have a double top with a double bottom here. That is actually very strong. This is also like a typical pattern you would see, but really started to move out. And volume started to come in here. And you can also see this is a nice pullback market green here, that means it is ready to move up. So no surprises. I think the Nasdaq is going to move up, and also I will talk about the interest rate, the impact of the interest rate, and why is it going up, and so on and so forth. So there's no surprise. Next, we're going to be looking at wicks, which is the fear indicator. So fear indicator, we are looking for a high number. When the market is very volatile, we're looking somewhere between above 20. So you can see right now it's only on the 14, way below the 20 mark, so which means the market is very contented to go higher from here onwards. I think these are the usual thing I wanted to address early in the presentation in here, so you can get into a habit knowing what are the wicks, what are the markets, so you will eventually become an expert in analyzing the market, looking at the technicals. And of course, this evening I want to teach you and also share with you how you can prepare for the market falling or market correction where we're going in here. All right. So where do we go from here? That was somewhere we started in March. As I said before, we are pretty anticipating. Right now we are in September. Now if you take note of September, if you go back here and re-log in again, go to, this is the VSA 360. It's a great dashboard accompany those of you who are investing, and of course for our members who's been really trusting their investment with us and also being guided by our premium membership. We thank you for the support in here. As we said, in March, April was a good month. All right, we can see June was a bad almost since going back to 2021. You can see in here July was a down month, and August was a good month. Okay, so we can see September right now is still kicking up to be 1% for the first time in the last 6 years. It is turning positive. If this is positive, then we will have a negative October in here, because the September and October generally are very pessimistic in here. Then November may be a good month, and then December, all right, as I said before, December, only the last 3 days is a rally. The rest of the time it doesn't move. Last 3 days it just moved up by 3%, which we've seen last year, and it closes at 12.47 in here. Okay, so that's where we are. So foreign funds, are they coming back in? Right, again we will look into this. So we'll just go back to our market here. So you can see from here, foreign funds is really scattering in here, right? You can see last 2 days it was still negative outflow. If you look back in the last 3 months, going back to June 18, there were only 12 days of positive foreign fund flow. So with the foreign funds not really coming in, how do you expect our KLC market to move higher, right? This is just silly, right, going forward to expect the market to go up if the foreign fund doesn't come in here. So we will see if we do get encouragement from the foreign fund coming in, then you will see our KLCI market too in here. Now for pretty much on the Trump second administration, right, we have figured out that the Bursa market may not rally like pretty much of the US market. The tariff is still really superimposing to our economy in here, really dragging it down, not doing as well what we see in Singapore, which is up almost 12% in here. The 25% tariff is still slapped on to a lot of our Malaysian product, with the exception of maybe semiconductor, which is taxed at 10%. And then the specific sector in here which is still booming, which is the data center, the utility, but that has also started to taper off. And also there are news right now with the property sectors, there's a lot of unsold, so watch out for those property stocks will eventually peak out and certainly coming down. And then the next one, foreign fund, which we just talked about here, and also market breadth and market depth, which I'll talk about the next couple of slides in here, where we refer to the FBM 70 mid-cap stock and also the FBM small cap stock. Really hasn't been rallying. What you see so far is like a couple of good stock like KJTS, KGB, SLOS. Those stocks are really making new high. But as for the rest of the market in here, without much smart money support as well as on good earnings, a lot of those stocks are really banking down. The market breadth and depth definitely has been missing for the KLCI market, and that's why I'm pretty confident to say that right now the market, if it unchanged, we are likely to close the FBM KLCI with a minus negative territory for the year 2025. Now, of course, there are many market crash preparation here. What we want to do here is to educate the public and also our members to be in here. Now, remember last Tuesday, I talked about a session, the live phase. I talk about the exchange focus where you can diversify out internationally to SGX in Hong Kong, and also on the 9th, which was yesterday, our member session. For our Monday side, we go into in-depth global diversified portfolio. I've given some of you some of the stocks and some of the stock trade idea that you could use. So those will be the one going forward. Pretty much today's talk is just an extension from here to really go down to the facts and figures in here to get you prepared. And also, if the market do crash, you better have some personal emergency fund, right? So let's go on to the next now slide in here. What is market correction? Now, market correction has many factors, and it's better to be, many of you be prepared of it. Now, if the market do drop 5%, 7%, I usually get calls or WhatsApp, is the market crashing? I said no. The definition is less than 20%, but once you get to 10%, be a bit careful. Now, if you look back, let's look at our KLCI, okay, and then we're going to go on to FKLI. All right, that's always been the good. So if you talk about market crash, it's always from the peak here. Okay, from the peak here. Great, thanks for your word of confidence. This is where the market dropped, right? You can see here, that's a 10% drop. All right, and so it's like from the peak to the trough. From the peak to the trough, that's what we are measuring in here. So right now, if you measure this from the peak to the trough, it's 5%. Yeah, usually about 5% in here. 5% people don't bother, but once it dropped to 10%, and we all know this was the announcement of the tariff, right? They're going to be announcing the tariff, and the market started to drop. Then June 6th, it had another drop again in here, and subsequently the market recovered, stand to price in very well. So these are what we call those big drop, the 20% drop. Now, if you look back in the KLCI, we haven't got too much other than the global sell-off that we have. And also, let's go on to the S&P 500. So we use the mini S&P 500 in here, right? And you can use this one here. During the same time, that big drop was about 11%. So it's still considered as a market correction. It can go up to very painful 15% and even up to 20%, right? And of course, once it goes to the 20%, like in year 2022, where we have the Russian-Ukraine war, where a lot of the food prices started to go up, that's where we started to see the market going in the bear market. Now, if you look here, this part in here, from here to here, that's what we saw. And if you trace back there, it's always going to be that 16%, right? It went down very sharp and then recover back, right? So usually that's the case. And since then, it's been really going up in here. So pending on no tariff, even today, we saw the news of the Israeli strike on Qatar, on the Hamas building in here, right? The market is still taking it very well, right? Sort of discounted it. But I want to prepare everybody, those of you listening and those of you who will be listening to the recording, is the aftermath of the interest rate cut, which is coming in September, actually in 7 days more, which I'm going to show you next in here. So bear in mind, market correction usually less than 20%. So what we talked about just now, like 16% is still a market correction and then rebound back. So some of you probably figure, oh, how I wish during at 16%, I did not panic and I'll buy some. Easier said than done, right? So that's why the market is always seems to be very fearful. But right now, nobody there to buy, right? They're waiting for the correction. Correction never comes. So you have to learn to appreciate those correction that you see in here. And if you were to buy at that time and still holding them right now, I think you've done pretty well. I think that's the lesson I want to share with you, that about market correction. A lot of them correct, right? And other times see a decline. It turned out it's a market crash. If it goes more than 20%, then it is likely to see into a bear market, right? Then the bear market start to register. So let's talk about the interest rate cut, right? Now, JP Morgan is warning that the Fed cuts everybody expect would sink the stock in here. And the next FOMC meeting will be in 7 days, all right? So this is why the build up to this 7 days more FOMC meeting, which you can get it from the US Fed Watch. So just type in Google US Fed Watch, you can get in this. And this is where we talk about the interest rate cut probability. Okay, now you can't see it here. Let me just fix it for you and push it up. All right, then you're able to see it much better. So, okay, so you can see on top here, I know the character is very small. Current target rate is 4.25 to 4.5, around 91.7%. This is the figure. Will say the rate will cut by 25 basis points. So they just say 91.7% probability will think the interest rate on the 17th of September, which is 7 days from now, right, will be 4 to 4.25. While there are 8.3%, there will be more than 50 basis point cut, which means 4.5 to 4. So 4.5. So usually we see this kind of interest rate cut. Eventually, what will happen also, our bank negara will also follow a bit lah, depending how they see the circumstances indeed. So do prepare. So what has happened in the past when they went through a lot of interest rate cut? Now these are past insight, which is a little bit of old stat, but it's also good to know. Now when you see this zero in here, this is the days. Okay, so when you talk about interest rate cut, then there is two bold green line, and this is a thin green line. When there's a recession, it's a different case, and there is a bold red line, that's a different case. Now, of course, many of you are saying that U.S. economy is still strong. The numbers coming out are very, very slow. It's going to be talking about recession in here. It's still in early days to talk about recession. We got to see the subsequent months in India. But what they do anticipate is the slowing of the economy activity and the interest inflation going up, so that especially the job figures which come up were less, then they are mounting to a pressure to cut interest rate. And of course many of you heard too that Trump also wanted to change the US Federal Reserve in here, which is very adamant because Jerome Powell has been around for a long time since during the Biden administration and refused to cut rate, because the last time they cut rates was 2024, which is about 9 months ago. So you can see from here, leading to a couple of days before the interest rate cut, that usually the market will fall. All right, so you saw where we are, right? The S&P 500 just shared with you. It is still ready to break higher there. So it is following slightly different scenario in here. So the call is this, if you look back, most of the interest rate cut happened just before a couple of days, it will fall off. So we still got 7 days. We are not sure that the rate will fall. But after that, when they cut the rates, right, especially when there are no recession, means there were 5 times there were no recession, and 3 times recession, because this data is from 1984 to 2019. That's why I said it's a bit low. Then you will have the market eventually rallying. So usually around this time, anticipate the market to fall. Then you'll be great. Then you'll see this chance to get in here. All right. Now, if you look back on the last 3 interest rate, I did a ChatGPT to check it out in here. You could see the last rate cut on September 18, 24, and also November, right? The market actually turning to be positive. So after they cut rates, after 30 days, the market actually turned positive. Just few days of dropping, that's all. It didn't drop and drop and drop, right? So there may not be any big correction that we see, like what we saw, at least 10%, 20%. So my story is to you is that even after the interest rate cut, there will be market falling, but it's not going to be great. We are not going to see the 10 and 15%. The last round that you saw, the 11 and 14%, which I just showed you, was due to the tariff, because that causes a lot of uncertainty in here. So what do you do? So what are the skills? What are things I should watch out for? So first of all, you want to see the breakdown of the support. All right, the support, which is a level in here. In the case of the US one, then you got to watch out this level in here, which is the 6,400 level for the S&P 500. All right, the S&P 500, and also watch out the 50-day moving average and the 200-day moving average. So right now it is still above the 50-day, but of course don't worry, once it start going down to or touching or approaching 50-day, you see a lot of media out there will be talking, and also your good self here telling you what are the things you watch out. But you got to hit 50 first before you hit 200. So let's talk about 50 first. 200, it is, where is 200? Let me just show you here. So right now you can see this one here is 40, so it's still above 40. This is a 200-day moving average, right? Now also take note, very interesting enough, when it goes up too much, like you see here, okay, let me just delete this. I'm trying to delete this, yeah. So you can see the last time when it went up too much, you can see here, right, from the 200-day moving average. It's like a rubber band, reversion to the mean. You can see from here 7% the market will come back down. Okay, here's 1. Okay, so 7%. Right now we are where? We are almost there. Okay, you can see from here to here, which is 8%. So that's why I talk about the likelihood of a market correction. Okay, you get me now? So this is why it's important you all know this going forward here. Okay, you all see that? Let me just show this you again. Sorry about that. That was okay. So let's go back this again. So you can see just now we have this 8 here was we have from the moving average about 7%, 8%. You see the market started to pull back. So right now this is where we are. So at 8% too. So why I use this is just a gauge. It's nothing very scientific, but you will know that once the market start to turn, it will turn up. It can break up like what we see. Remember, we got 7 days more to the announcement of the rate cuts. So right now the market may turn based on past history in here, and also right at 8% also market turn. So don't be surprised if the market to break down. You'll be first to know with the condition that we have. So if the market do break down in here, you will have breaking to the 6,400 level. Alright, 6,400 level is the support level. Alright, it is still above the 50-day moving average, which is the monthly high. Now if you look back in our FBN KLCI, alright, you can see the FBN KLCI hasn't turned green pentagon yet, and it's been range bound. It did dip above the 1600, pull back right now at 1590 in here. We're still waiting for the green pentagon. It is still in a good upwards trend in here. This is the S&P 500, which I've just talked about, also green pentagon. Our KLCI hasn't done green pentagon yet. So right now it is going up, but we are anticipating this market to turn back downwards. So that's why all this. But the FBM 70 and the FBM small cap stocks are looking differently. The FBM 70, which consists the top 70 large market cap, you can see it is really struggling, and you can see the trend zone are pointing down. The small cap stock pointing down, but started to break up in here. So small cap will start to make a move up, but if they able to sustain, then you're going to get the FBM 70 coming in here. Okay, so what is the strategy going forward to do anticipating this market correction? And of course, if you have any stocks you want me to take a look in here, feel free to pencil in here. If not, give me a thumbs up for my work that I prepared this for you this evening, so you can anticipate this market correction coming in. So first one is do nothing. Okay, do nothing, stay on course. If you have invested in good stocks, just stay with it, hang on to it. And market correction, like I said before, 10%, you'll rebound back. That's good. 2, do the defensive move. Start raising cash. Do partial, sell some of the stocks that's already been making, raise partial profit, stay defensive. And then the third one here is the offensive play. You want to be ready, don't short yet, okay? Think to short futures, and think to buy inverse ETF. Okay, we'll talk a bit about the inverse ETF of the US side, or maybe in Malaysia you can buy the structured warrant, right, only for the FBM KLCI only FBM KLCI only. So the first one is stay on course. It's basically just sitting down in the couch. If your time horizon is at least 10 years in here, history will be on your side. Correction is just normal, stay invested, but the psychology in your head, right? So that's why I want to prep you guys up, knowing market correction, September is coming, but at the end of the day, it's going to close higher, so that's important. Second one, just like this football team in here, play defensive, guard the goal post, okay? So if you're using the SmartRobie of the VSA 360 and some of your stocks has already red pentagon clearly visible, it's on the right, like maybe a bit like KGB, KJTS has turned red pentagon, SL West also turned red, take some profit, okay? Then you can shift to defensive sectors like consumer staple, utility, but only when the pentagon in the sector is green pentagon. So this is what I mean. So you will go to the right. So what you want to do is go to the VSA 360, you look at the Bursa sector in here, and this is what I talk about. So those sectors that is green, like consumer, started turn green, industrial plantation, okay, those are green, and these are the stocks that you wanted to be in, okay, green plantation, REITs, just turned green Pentagon, so those are the ones that property did pretty well, right? So those are the side that you want to shift in. I do think that the property REITs are pretty good, and right now the sector has turned green Pentagon, so make sure you get that on your VSA 360 to see all those. And then third, the third approach to the defense, buy gold and silver, right? And also the bond ETF. Right, gold and silver, I think I've talked about it on Tuesday, which always been part of your staple if you want to have a longer term in here. A little bit of silver, get the GLD or get the CEF, which I talk about on Tuesday. Members, make sure you get and watch that video too. And also the TLT bond. Okay, now one of the reasons why is because when bond prices are higher when interest rate go down, we are anticipating the interest rate to go down, so bond prices goes up. So one of the stocks you can look at is TLT, which I do have them. TLT, right? It's a Treasury 20-year bond. Okay, so you can see right now green Pentagon is moved up already. Now once they started to cut up, bond prices will go up, and you can see this is a nice degree of, so switch to a weekly chart, you can see it's been a downtrend ready to move up, and 91.7% of an interest rate cut coming up, so that's why we're seeing this market started to move up. It's just the beginning, all right, ladies and gentlemen in here. Then the third approach is the offensive play, just like the Predator. Is that called Predator? Yeah, I think the Predator drone, right, that goes up and shoot, you know. So you want to borrow shares to short. I think in Malaysia you can do that. You can do that on the intraday, but make sure you apply that. US do have some option in here, but I think now remember, these are not for beginner. These are for a little bit more experience. If you want to do that, just maybe do it on the paper, follow a few more. And then selling futures, highly leveraged product, you need a futures trading account in here. I think the easiest one will be inverse ETF. Even if you make mistakes, right, the ETF, you can always get out in here because there won't be any margin call. Or you can buy the structured warrant, like the Macquarie warrant. Buying the put options, get ready to buy, wait until the thing turn red Pentagon, as I said before, or prepare to buy on dips on those good stocks that you have, and then prepare for the year-end rally, because I always talk about November and December, there will be some rally in here. So if you buy when this market start to correct, and so you can really see where I'm coming from, right? So let's take a look at the inverse ETF. All right, the inverse ETF is an interesting one. So I'm just going to shift you over here, move it a bit, right? So you got SH. These are one-time ETF. I'm not going to go into the 2-time and the 3-time. We just want to make it simple. So you can see right now, market still going down, right? It is still red so we're just going to wait for the green Pentagon to come. The green Pentagon will come, and then the market. So this is SH. Okay, stand for Pro Share Short S&P 500. PSQ, very similar to, also down, very similar one of all of them, right? Yeah, PSQ. Then you got the spider down, one time only, okay? The spider down one. So these are the one, get ready. If you have the VSA 360, that's great. Wait for the green Pentagon to come, okay? Like you came here, green Pentagon, pop all the way, right? You can see from here to the green one here, that's about 15%. Okay, so go for like 10% return. So if the market goes up, shoot up, but you can also use the wicks, all right, to measure this two in here. So those are being, I think, for if you are just slightly more experienced than beginner, like some of our members, do the inverse ETF. Be ready, be prepared first. Don't until the time market turns short only, right? So this session is all about preparing you and be ready. So in conclusion, right, so we come to almost the end of our live Facebook in here. We want to keep it to around 35 minutes, 40 minutes, as I said before, for our usual time. Stock markets are normal. All right, use the Pentagon Guider and also sentiment. Check out the sentiment in here. Like Warren Buffett say in here, right? How to close the door, be fearful when others are greedy, be greedy when others are fearful. So right now, what is the market sentiment? A lot of people are very fearful, right? Still, that means you can still buy. There hasn't been really a really greedy market going forward because everybody is anticipating that interest rate cut, and so what I was talking about. Then check out those advanced strategy in here. Do a bit of research on those inverse ETF, and if you are looking to short too, right, you might want to check out the structured call warrant. And more importantly is to have a plan. Don't until the market, let's say the next 3 or 4 days, if the market were to break, as I said before, like the US, it's been 8% up from the moving average in here. It can turn down in here based on what we've seen in the past statistics in here, right? And at least you have a plan, right? Whether you use approach 1, 2, and 3, I leave it up to you. But do leave a comment in here on to it if you find the strategy that I talk about been very helpful, and it also helped me to plan for my new forward going forward. Now, if you have any stocks you want me to look at SGX Hong Kong, do pencil those in there. Alright, you can also look at the Nvidia. These are my regular shares I've always been looking at, and TSM has done pretty well in here. Not a brainer. Your own Malaysian shares, we can look at IJM. Okay. And they've been up, right? So we just wait. We'll see whether we have any green pentagon. Yeah, it's still in green pentagon. Okay, no issues, and turning up again in here. So if you're going to be looking to buy or sell, have a plan. Follow those trading bands that we have in our SmartRobie in here, and going forward. All right, I will talk more about the SmartRobie trade idea, some of our past collections, so make sure you join me on Monday, every Monday at 10:15 in here for the US and also in here. So the big picture I always tell people is to look at the market structure. Where is the KLCR right now? Are we in stage 2, or are we in stage 3 or stage 4? I think this is the best practice. Do this practice in here. You say that I am in stage 2. I expect the market to go up, and then use this to have a self-correcting mechanism that you have within in here. So that way going forward, you have more confidence in understanding where the market strikes, because this is what we usually use in there, right? So right now, some of you may be saying, hey, we could be in stage 3 for the US market, maybe stage 2 for the Malaysian market. That's good. If it's a stage 3, then be prepared for stage 4, which is why the talk tonight is about market correction. So that's all I have for tonight, right? Look at the facts, right? And don't forget, download the SmartRobie apps from the Pentagon. Our premium memberships will be going up soon, so if you are intended to check out our premium membership where we'll guide you through our live weekly training and our support in here, that's a better one. Our intake Series 5, we started 7th of March in here. Anytime you can join us, and don't forget to subscribe to our Telegram chat for all our stock market information to bring you up to date and at least give you a chance to profit when market is higher, and also a chance to take profit when the market's about to correct right now. So that's all we have. Thank you for your time. I hope you all learned something new in here. Don't forget to go over to our Google review and give us a good review if you've done a pretty good job, and subscribe to our YouTube. So that's all we have tonight. Thank you for coming.